Welcome back. Well, the market's getting a bit iffy now. The Nifty is down 32. The Bank Nifty is the one which is seeing a bit of a weakness now. 180 points down on that one. The mid-cap still doing well. Advanced decline at about 2:1. One of the stocks of the day is, of course, Triveni Turbine. Now, like we alerted you this morning, there's been a big block deal in Triveni Turbine with 21.8% equity changing hands. To alert our viewers, earlier this year, the board of directors of Triveni Engineering had decided to divest their full 21.85% stake in the company. Nikhil Sahni, Vice Chairman and Managing Director at Triveni Turbines, is now joining us. Nikhil, good morning. So this is part of the plan, right? Who bought this? Who bought this stake?
Good morning. Yes, thank you for having us on. We're very proud that we have, and I believe very marquee investors, many sovereign wealth funds and large international institutional investors, as well as very large mutual funds. And I think that we have, I believe, extremely quality investors. This was, of course, as you alluded to, a divestiture from the engineering side, where they sold 21.8%, I think, for approximately 1,600 crores. And we at Triveni Turbine are extremely proud of the fact that we've been able to actually expand the float of the stock, as well as the promoters itself have also bought 10% of that block.
Promoters bought.
So
promoters bought 10% and 11.85 is to the investors, which is okay. Yes. Because the reason I ask you is that between Sahni family and of course Mr. Drusani holds about 7.2%. You yourself hold about 4.7%. So what will be the stake of the Sahni family now? Will it be somewhere around 55% or thereabout?
Exactly. It is to an absolute majority, and that is the plan. So of course, they will be streamlining within the family so that there can be a clearer succession, but this is just...
So, sorry, I think your voice is breaking, Nikhil. I just wanted to understand... Okay, Nikhil, sorry, your voice is breaking. I think we need to get you back on a clearer line because, so just to put things in perspective, before this deal, promoters held about 67%, out of which, of course, the majority was with the Sahni family, and Triveni Engineering, which is the sugar company of the group, that held about 21% stake, out of which 10% is being bought by the promoters of the company. And the rest, as I said, has gone to some of the marquee investors. So, sorry, Nikhil, we got you back. Why not buy the entire stake? Are you comfortable letting this 10% go, 10 or 11% go?
Well, actually, the fact is that this was a sale from Triveni Engineering side. Of course, the liquidity actually created by the promoters. As you could tell, this is quite a sizable deal. So the liquidity that we were able to create, I think, is ample for us to display utmost confidence in the company, which as you may know, is performing exceedingly well in the space that we're in. And so we're comfortable at this level, and we think that this is the long-term holding level of the promoters. As you would imagine that while Triveni Engineering was deemed as a promoter, it never exercised any rights as a promoter. And so, very frankly, this is much clearer to have it in terms of holding structure.
Absolutely. So that point is clearer now. So, so Sahni family now holds 55%, and there's no plan to sell any further. You'll stay at 55. That's part number one.
Exactly.
And if you could give us some details in terms of who bought. I mean, you said marquee investors, but a couple of names would help.
I think that bankers will take the names out, but we had everyone from the sovereign wealth funds of Singapore and Abu Dhabi to large California-based mutual funds and, of course, very marquee Indian mutual funds, which you all know from the largest banks and largest mutual funds in the country. So we've had extremely good appetite, and as you would see, I think the bankers also did a very good deal with having the block sold at in the block window, which is at a minimal discount to previous close.
Nikhil, good morning. So how will the leadership structure now look at Triveni Turbine? What will be the core areas of focus for the turbine management?
Nothing changes. Well, very frankly, the business is doing exceedingly well, and thank you for asking that question. Triveni Turbine continues to be a leader in the space of small steam turbines and a global leader in the structurally buoyant area of thermal renewable solutions. As we see, over 50% of our demand comes from international market, and structurally, despite the uncertainty that exists with fixed capital formation internationally, the renewable energy investments are something that are quite consistent. In fact, the insecurity driven around energy prices has has actually propelled this market even further. Despite that, we believe that our expansion of the market, addressable market, by looking at it from a perspective of larger steam turbines, has also given confidence in our order booking. Ultimately, in our last investor call, we'd given a visibility of growth of the business of 35% CAGR for this year as well as next year. And this is a visibility that we get not only out of our order book, which grew by over 100% last year, but also of our inquiry book, which suggests a very, very good order booking in the coming quarters and then therefore for this year, which will of course get executed in the next financial year. But from a strategy management perspective, nothing is changing.
Okay, but since the business is doing quite well, do you plan to reward shareholders of Triveni Engineering post this block deal and raising funds? Is a buyback on the cards anytime soon?
I can speak only for Triveni Turbines. I would imagine that those are decisions that would have to be taken by the board of directors of Triveni Engineering, and I'm sure that they would look at things in a prudent manner, depending on whatever their capex plans may be.
Nikhil, hi.
Unfortunately, I can't speak very fast.
Nikhil, hi, good morning. Prashant here. Could you tell us what is the value of orders you've taken in Q2 so far? I mean, the order book stood at about 3,600 crores at the end of Q1.
No, I think the value may be slightly different from what you're saying. But as we sit in the middle of Q2 and towards the end of Q2, our order booking has been consistent in its growth that we saw even in Q1. In fact, our growth is in far excess of that. We are in a manner to, since we don't report individual orders at this point in time, and we report it only at the quarterly end date, suffice to say that the growth in the order booking has sustained.
Sorry, you said the number was different. I have a number at 3,580 crores to be precise. Are you saying it was higher?
3,580 was from last quarter. No, that was an absolute order booking.
Yes.
The order backlog was in excess of 1,200 crores.
Yeah.
As you understand, our order execution cycle is about 9 months.
Right.
And so that figure is suggestive of a 9-month turnover. We believe in this current quarter we've had some very good wins. This has been backed not only in the domestic market by some large orders that have come in through the CPSE route. There's a lot of capex that is happening throughout the ecosystem. As a steam turbine provider into the commoditized space, we are a beneficiary of fixed capital formation in the space. And so we right now investments in oil and gas, cement, fertilizer, chemicals, petrochemicals is something that we are benefiting from, apart from the traditional markets of cement, waste heat recovery, or sugar distilleries, etc.
Okay, no, Nikhil, sorry, just wanting to understand the basic structure once again, because even if you go to Triveni Engineering shareholders, there also I think you have shareholding. I think Tarun has shareholding. I think, of course, your father, Mr. Drusani, also has, like in Triveni Turbine, stake here. So what's the eventual plan? In terms of the overall structure going forward for both these names, because you all three have stakes in both the companies.
Yes, as you could see, I think the ultimate plan, as I am the Vice Chairman and Managing Director of Triveni Turbine and my brother is the Vice Chairman and Managing Director of Triveni Engineering, it would be for majority shareholding to reside with the operational executives of that business from a family perspective. As you rightly pointed out, the principal promoters are my father, my brother and myself. And as my father's plans his succession, it will logically fall to the sibling that is operationally in charge of that business.
Okay, so there will be more inter-se promoter transfers going forward between the brothers?
Yes. I think that is safe to assume. Okay. I would imagine that the resultant would be that the operational executive would have in excess of 50% and that the resultant individual shareholding would continue, so that there is some degree of participation within the family from a long-term perspective.
So from the patriarch point of view, Mr. Drusani will continue to hold his stake. The brothers over the next few years will completely take over the two companies and have the inter-se transfer, is it?
Yes, I would imagine that my father would actually gift it onto the correct sibling.
Okay, so both siblings then eventually will have the 55% stake in respective companies. That's the eventual plan.
No, I think Triveni Engineering, just as a resultant shareholding stake, may be higher than that. Okay. So, but I think you're going into matters which I think are a little fluid, but the incentive and the direction are clear.
No, but the succession planning is very clear. It will happen in this way.
Yes, that is very clear. In terms, I think both businesses are in a very good spot right now. I think, as you pointed out, there is very strong government policy which is driving the sugar sector, as well as the capex that is happening in areas like defense, which is benefiting Triveni Engineering. Triveni Turbine has a more global approach, and our investments into research and development, which are really at the forefront of what capital goods companies in India are doing, has really borne fruit for us to attain a global leadership position. And we're very excited about some of the developments that are coming out, and which we'll be reporting in the next several quarters, which will further expand our reach and value proposition into the market.
Talking about the business, then there's an expansion of the Sompura facility that was to take place was to be completed by Q2 of this year. How much is the incremental revenues that one can expect from it?
Well, if you look at our balance sheet, we have a high asset turnover. So very frankly, we're not, and what I mean by that is that this expansion, which took place in capacity for testing, assembly, and quality control, was at the extent of about 35 odd crores, which expanded our capacity by approximately 30%. So that sounds like a very small number for such a large capacity increase. But if you look at it from the perspective of capacity constraints of the company, we don't face any. We may be expanding capacity further given the unprecedented demand that we're seeing in certain sectors. So there may be further expansion that we may see in Sompura in the coming year, which of course we will take through the board. The utilization of this capacity, we imagine, would be near full by the end of next calendar year.
Okay.
No, got that, Nikhil. Just one thing, your margins, EBITDA margins at the end of the last quarter were just under 19%, and you kind of guided that they could be upwards of 20%. Are you on track for that this quarter, this year, for the year?
Yes. Actually, what we find in this year is we are a beneficiary of the orders that we took in the previous year. And in the previous year, we took in more orders from the domestic market, which have always carried lower margins for us. As we get into the execution of this financial year, not only do we have more exports, but we have operating leverage in terms of an expansion in our overall turnover. That coupled with a reduction in base raw material prices, as you may have noticed, steel prices, copper, etc., have come down, but it takes a little bit of time for it to translate down into a bottom line. Should mean that we don't have margin pressure. But at the same time, we will be spending more money on employees. We expanded our workforce by about 10% last year. Again, we'll be expanding our workforce by between 15 to 18% this year. This is all to cater to the over 35-40% growth that we will see in the current next year and going forward as well.
Okay.
So,
Sure. Nikhil, we appreciate your thoughts. Thanks a lot for fielding all of our questions and giving us a lot of information on the company. So that's Triveni Turbine. We need to move on. The cement space has been in top focus over the past few weeks. Jeffrey's check post-interaction with dealers suggests that prices continue to decline in most markets due to the monsoon, and that there has already been a 6% sequential slip in Q1 so far. To find out where things stand, Rajneesh Kapoor, who is the COO of JK Cement, is with us. Mr. Kapoor, thank you for waiting by patiently. I wanted to understand from you, if you can just quantify for us, what has the price fall been so far in this quarter, and have you attempted any move on prices, any price increase at all?
Yeah, so good morning, and thanks for having me on the channel. Price fall in the quarter two has been quite substantial. I would say that, if I look at the north markets where JK has large presence, we have seen a fall of about 30 to 35 rupees per bag. And that goes to about 7 to 8% of total price fall that has taken place. And this normally in monsoons, we do see a price fall, but this time also I think it was a little significant. And at this point of time in the month of September, since the volumes have picked up, although we still have some, late monsoons going on in some of the places where, especially in the northern part of the country. But a little uptick on the price is coming up in this at this point of time. So I think the overall realizations drop on a quarter-on-quarter basis in this quarter is going to be about 5 to 6% for the industry at large. And it all depends on how the September prices start getting picked up. Generally, pre-Diwali times are the times when construction also starts happening. And as the monsoon starts exiting again, a lot of construction activities start off. So we are seeing a fairly healthy demand now in terms of, as what we saw in the months of July and August. So hopeful that there would be recovery of some of the losses that we have had in terms of price in this quarter, in the first 2 months of the quarter.
Okay, sharper than expected price fall in this monsoon season, but expected to pick up. So you have visibility for strong volume, stronger volume growth as we come out of the monsoon season, Mr. Kapoor. Could you quantify that for us?
Yeah. So in terms of quantification, I think quarter one was pretty good. Quarter one, we as an industry, we saw an increase of about 15 to 16%. We as a company also had about 18 to 20% growth. Though South had very, exceedingly good in terms of demand. July and August was about 2 to 3% price, volume increase in various markets. I think September would be a little bit better. So I feel that by the time this quarter gets over, we might end up at around 4 to 5% of volume growth in this quarter. But in Q3 is the one where I'm really, hopeful that the demand is going to, keep increasing. And for the year end, I would say that as an industry, we are currently looking at about 8% of volume growth.
Okay, 8% of volume growth for the year end. Just coming back to the price fall, right? You said that there's a 30 to 35 rupees per bag fall in the northern market, and there could be a 5 to 6% fall in realizations for the industry. What does this mean for JK Cement itself? Your EBITDA per ton was around 1137 rupees per ton in the quarter gone by. How much lower do you think it could fall through the course of the year?
So not going into specific talking of JK, but I can just give you a broad idea as to how the capex fall is going to happen in this quarter. There are two factors which are very important when we look at the EBITDA per ton of the cement industry. The first is the top line, where we feel that the revenue is going to be down. The realizations are down as compared to Q1 by 5 to 6%. And second is that the cost increase, I think in terms of cost, this quarter is going to be one of the highest in a very long time that we can remember. While the petcoke prices and the fuel prices have started easing down now at this point of time, but the peak of your inventories that you were holding, the expensive inventory that you had purchased in the previous couple of months is going to hit. So I am actually looking at a average 300 to 400 rupees drop in the EBITDA per ton across the industry. And therefore, we won't be an exception to that. The only thing that is going to be different for that is that how other companies or how companies are able to take in some of the cost-cutting measures. And those cost-cutting measures can only, give you an advantage of about 50 to 75 rupees in terms of you have increased your alternative fuel utilizations and things like that. You're able to do some efficient, stock management. But overall, as an industry, I think we are looking at a quarter where on a quarter-on-quarter basis, the industry average, which was, I think, about 959 in the region of between 950 to 1,000 rupees in the last quarter, is likely to fall by about 300 to 400 rupees in Q2.
And then you'll see, similar proportionate kind of impact to your earnings as well. Could you tell us what is the total capex plan, Mr. Kapoor, for 23? How much of the Panna unit capacity expansion has been done? How much is pending?
So Panna unit, we are nearing the completion of Panna unit. There have been some unprecedented monsoons which have slightly, made our plans a little slow. But our Panna unit, we are expecting to, start the plant in the month of October. Initial teething problems might be there. And by October and early November, we will also start a grinding unit in Hamirpur. There would be a couple of things which might be left in terms of, operationalizing our waste heat recovery system, which is in the process and may take a month more. But overall, we are expecting to have our first cement out from the Panna integrated plant in the month of October. And towards the end of October or early part of November, we are looking at our Hamirpur plant also to start off. So both our capacity expansion projects are well in time. And we are actually looking forward to the new volumes getting added.
Mr. Kapoor, I have to ask you this because industry dynamics are changing so much, right? With such a large player coming on board now, I'm sure pricing, volumes are all going to change quite a bit as well. Will JK Cement look to sell if a larger peer comes up with a good offer?
I think without doubt, no. We are a very strong company. We are a company which is moving, which has over the last 6, 7, 8 years shown how a cement plant, a cement company can, start improving. You can see it in our valuations. You can see it in the ambitious plan that we have. We have a very strong set of promoters who have their vision very, very clear in terms of making the cement grow, this company grow. So therefore, the question that you could ask me is, what is the volume growth that we are going to look at as JK Cement?
So go ahead, then tell us what is the growth? I mean, you spoke about 4 to 5%.
Certainly. So that is what I would say, that we are looking at growing profitably, number one. We are looking to maintain the core values of our core philosophy of our company in terms of, being firstly delivering quality product, making sure that the cost efficiencies, we are among the best in the country, and also improving the brand image and brand positioning. And I think we are well on course to becoming 25 million tons of capacity in next 2 to 3 years' time, and then we move on. So we don't actually make very big plans that we are going to be 50 million tons. We make plans for 3 to 5 years, and we are very much well on course. And you should watch this space for more announcements from our company as time comes.
No, that I agree. I mean, there's no denying that you're well on course to achieve your own targets. But, things are changing quite rapidly, right? I mean, when one of the largest groups in the country goes ahead and makes such a large acquisition, you wonder whether there'll be predatory pricing, what happens to cement capacities. So, not now, but at some point in time, if an offer comes, would it be enticing for you?
So I am not the right person to go beyond that. I told it very clearly that without doubt, no. But yes, when I look at Adani coming into the cement space, I think we have to also understand that at this point of time, they have taken over a company. So they have not added new volumes. They are going to bring in new efficiencies in this business, I'm sure, with the synergies that they have at their back end and both at front end. They have, a lot of in terms of ports, logistics, in terms of renewable energy, they are at forefront in the country. And that I very strongly feel is going to trigger, a sort of an competitive spirit in the industry. That's the way we look at it. We have to do better than our competition, and we have to constantly keep, inventing and keep doing things and keep innovating.
So when you talk about innovating and matching up to competition, sir, is an inorganic acquisition on the cards for you? I mean, you're looking to go from 20 to 25 million tons. Will that incremental 5 million tons, will you look to buy any asset?
So not as of now, buying an asset also depends on the size of the asset, on terms of, geographical dispersion of the asset. So there are a number of things. I'm not saying no. If something good comes up, yes, of course, it can be there. Our balance sheet is becoming stronger now. So we could look at it. But at this point of time, I would say that no, we are not really actively scouting for an asset. We have our own plans. We have our Panna line, which is now, we have put the first line. We have enough reserves in this, area. We could think in terms of adding a second line. We have already started, finalizing a couple of more grinding units. We have already won a mine in Jaisalmer, where in next 4 to 5 years time, we would see the plant coming up there. So we have actually a lot on our hand in terms of our greenfield and brownfield expansions. And during the course of this, if we find some, something coming up, yes, of course, it can be considered at that point of time.
All right, we'll leave it there today, sir. Thanks a lot for joining us. That's JK Cement. Talking about cement, there's some brutal profit taking today happening in names like ACC and Ambuja. ACC in particular is now down about 4%. I think while this announcement on the pledge might have come yesterday in market hours, I think the market's taken cognizance of this now. And both these names had run up a lot, so I guess because of that. In fact, in general, there's some profit taking in the Adani group. The Adani enterprise stock itself is also down about 2%. The market is actually now breaking yesterday's low, just about at yesterday's low. Let's see if that holds or not. For now, let's cut across to Madhvi Puri-Buch, the chairperson of SEVI, who's speaking at the Global Fintech Fest.
Under certain market conditions. Now, are you being conned? Right? So, if your business model is going to rely on a black box which is not open to sunlight for disinfecting, if it is not capable of being validated and audited, and your claims cannot be audited and validated, it cannot be permitted. But if it can be audited, can be validated, nobody is happier than us to facilitate new and innovative offerings in the market. So this is the second checkbox. One was anonymous, the other is validation of your claims. If you're unable to validate, your business model is under threat, because when the regulator shows up, this will not be acceptable. The third is back to my favorite slide. When it comes to financial inclusion, most regulators in our country have very, very supportive regulation. Okay? So for instance, let's say SEBI itself, in the mutual fund industry, up to 50,000 rupees, cash transaction is permitted. Up to a certain limit, PAN number is not required. You just need something called a PECRIN number. So when it comes to financial inclusion, the whole objective of the regulator is aligned with you. So if you are operating at the bottom of the pyramid, truly operating at the bottom of the pyramid, it's not just a nice tag to have, and you can demonstrate that these are the kinds of limits that you have in terms of your offerings, the regulator is more than delighted to be supportive and to make it easier, simply because that is an important part of our agenda always. So this is the third checklist. If your business model facilitates financial inclusion, then to that extent that you have those citizens within your fold, the regulator is bound to be very supportive. It will be a sustainable business model. This is one of the key requirements of every regulator. I refer to it as the Abhimanyu complex. If you have a business model which relies on the assumption that once the customer is in, it's very hard for him to get out, we don't like it. So building barriers to exit, again, if your business model relies on that, it is unlikely to find favor with the regulator. It's a very important principle that we follow. And therefore, as I said, when the regulator shows up, you will be vulnerable to regulatory risk, because the regulator will say a person who has ease of entering has a right for ease of exit. If you make it hard for him to leave, we will not permit you to make it easy for him to come in. We do not want Abhimanyus in our market.
Welcome back. Well, this morning I spoke about 17,744 as the first support zone, and the risk-reward trade. The low is 17,739, so the market sort of respected that and has moved up. Could be very interesting if that is the case and if it holds it. Mitesh Thakkar is back with us. Mitesh, bouncing right from yesterday's low. Your thoughts on the Nifty now and your stock calls?
So, yesterday we had opened around these levels and then gone up and then closed slightly weak, and today we are holding on to that low. I think that's a good sign. Also is the fact that yesterday's gap up is being held into. So I think broadly this is still a market which is not expanding, but is refusing to fall down, which is a good sign, and I think eventually that should lead to an upside breakout. On the stock side, I have buy calls, in fact, despite the fact that the market is slightly negative. Sun Pharma is a buy. Keep a stop just below levels of 900 here. Look for targets of around 950 on the upside. And the other one which I like is Lupin. So both pharma names on the list. Lupin is a buy. Keep a stop at about levels of 660 here and look for targets of around 700.
Okay, thanks a lot for that. Well, let's shift focus to the commodity markets now. Manisha Gupta is here to give us a lowdown on all that's happening there. Manisha, over to you.
Thank you so much for that. I'm looking at the metals as a sector where we have seen a second straight day of decline coming in, and majorly because you have the US dollar index, which is trading at a 20-year highs. So everything that is in metals is trading in the negative right now. The global industrial activity, as we have seen, has slowed down for many of the countries and continues to show that weaker number here is weighing on. And that is the big data event that we are waiting for. The US Fed interest hike is waited as of now. In another 12 to 18 hours is what the markets would be reacting to that as well. 75 basis points has been factored in, but it is really about the guidance that we will hear going forward is what is weighing onto the metals there. And it's not just that one central bank. We have seen Sweden raise interest rates by a full 100 basis points. We've seen those statements come in from ECB that they are looking to hike interest rates even further. You have Bank of England, Norway, Switzerland, Japan, all of those monetary policy meetings also slated in this week itself. So it is going to be a roller coaster of a day or a week as we move forward onto that one there. When you look at the silver prices, we saw 2% of a decline in the overnight market, some more decline coming in on your screens right now. The gold prices are trading at a 29-month lows. We've seen a $1,650 per ounce of a low onto that one as well. And the decline has just about continued in the industrial metal space. Copper prices are trading at a 2-week low, some more decline coming in right now. For copper, essentially, it also is about the inventories which have continued to rise for a second straight day. And also when you look at the on-ground delivery mark, that has now gone down as well. In late August, 50% of stuff that was lying on LME warehouses for marked for delivery, which has gone down to 11% now. So that tells you that the on-ground demand also seems to be petering out. And then you have aluminum, which is trading at a 17-month lows, continues to see a decline right now as well. Zinc is trading at a 2-month lows already, some more decline coming in on your screens there. And even as there are statements from Europe suggesting that nearly 50% of capacity in Europe in sense of aluminum and zinc is offline right now. Even then, the markets are not finding demand enough to see support from those kind of fundamentals. The Chinese demand has continued to decline for the month of August. That has been weighing onto the prices. But the Chinese COVID restrictions seems to be going off, and that perhaps could be a bit of a support. But that would be seen only after the US Fed meeting is done and dusted with. In the meanwhile, take a look at the prices on how they have been on a week-on-week basis ahead of the US Fed meeting. We've seen 2 to 3% of a decline come in for gold and silver, and that's exactly the kind of decline that we have seen for industrial metals as well. Major sharp falls coming in for iron ore, but apart from that, 0.5 to 2.5% of a decline for the rest of the metal prices also.
Okay, thanks a lot, Manisha, for that. Let's slip into a quick break. On the other side, our special segment, it's the economy. Lata will connect with Paul Grunwald, the global chief economist of S&P Global Ratings, to talk about another possible hike by the Fed. Stay tuned.